Good afternoon. This is Tim Wegman of BIS Commodities, and taking a look at the week in review. Let's start out to see where we close for the week. Starting out in the grain markets, corn closed 4.25 cents lower at 3.86 in the May contract this week. Beans, the winner, up almost 20.5 cents at 10.54 in the May contract. May wheat closed near its low of the week, which actually was a tick higher in the May contract at 472.5. Taking a look at the cattle market, April cattle closed up $4.32 this week at 116.55 as a settlement. And April hogs went off today, last trading day for April hog futures at 53.82. That was up $1.70 on the week, and that taking a look at the June hogs, were up $4.32 this week at 77.60. Looks as if crude's going to close somewhere around 67.30. That's going to be up over $5 on the week. The dollar looks to be somewhere around 40 points weaker at 89.50. Stock market looks about 350 points stronger on the week, with the Dow around 24,300. As far as big news items in the grain market this week, the main item was our monthly supply and demand report. And the question going into that, were we going to see how the WASDE was going to react to the quarterly stocks numbers, which came in larger than expected on the previous week planning intentions and quarterly stocks report. I wasn't expecting much of a change in the carryout for corn. We did come in at 2.182 billion bushels carryout. That was a slight increase from last month, and pretty much in line with what the trade expected. The big thing there was feed. We did lower feed demand 50 million bushels. We lowered residual 5 million bushels. Still doesn't account for the larger than expected stocks, but I think what we need to do is go back and look at last year's final production numbers. My thoughts moving forward, if we see those stocks continue to hang out there, we're probably looking at an underestimation of last year's yield. Taking a look at corn from a world perspective, we did see the carryout drop there as well. A couple million metric ton. So all in all, not a big situation in the corn market. So it's considered fairly neutral. For a fair amount of news items out there this week. Still concerns on the political front. One with tariffs still floating around out in the world, as well as trying to get NAFTA approved. Also concerns over the RFS attacks there. We did have Trump come out and mention something this week about a year-round 15% blend for ethanol. We'll see if that transpires or not, but certainly something supportive. And finally, we're going to keep an eye on the weather as far as planting delays. Obviously, at this point, not a major concern, but the forecast certainly doesn't look good. We did get our first planting progress report this week at 2% from a national perspective, right in line with the 5-year average. That'll be what we'll keep an eye on next week, is our planting progress, and obviously weather should be the big driver. Taking a look at the soybean market, carryout there was 555 million bushels last month. The trade was looking for a small bump up there as well, reflecting the larger than expected quarterly stocks. Somewhat of the same nature as corn. I think what we're looking at there is an underestimation of last year's yield, but we actually seen a drop of 5 million bushels to 550 million, and that came in the form of an increased crush at 10 million, but we did see the U.S. lower seed and residual 6 million against that, giving us that rounding of a 5 million less carryout number in beans. Probably more the supportive thing here for beans was we did see world ending stocks reduced about 4 million metric tons as well, and the big lion's share of that was we did see a big cut finally in Argentina crop production. We've seen the USDA whack 7 million metric tons off their production estimate. So even though we did see Brazil's increase again, that was the big cut. And as I take a look at South America from this point forward, I would suspect that the big cut has been made down there as far as the USDA is concerned. And subsequent reports, I think what we're going to see is a gradual increase in Brazil production, maybe a gradual decrease in Argentina to offset that. So I think it is what it is right there now. Obviously, moving forward, a lot of hot topics out here with beans. We've seen exports very good the last couple weeks as the world has come to buy our beans upon the tariff concern. It seems as if we scared the world into buying beans, and with Brazil upping their basis substantially, we've seen a lot of the world business come our way. We've actually seen Argentina come in and buy some beans for us for the new crop, the 18-19 year, something to keep an eye on moving forward. And we didn't see those daily announcements yesterday or today. That might have been a little bit of the reason we've seen the bean sell off here at the end of the week as well. But some of that may have been we have a lot of length by the managed money coming into both corn and soybeans. They're probably looking to pair some of that length going into the weekend. Obviously, we're setting ourselves up for a Sunday night weather trade again, and that'll be the driver here moving forward. Taking a look at the livestock markets, cattle this week able to find some strength, and what we're seeing is a steady cash trade earlier in the week or midweek, but we're seeing some much stronger cash trades at the end of the week. 121, 122 cash traded here today. Certainly that has supported the April contract as we're trying to see some convergence there with a very strong basis still favoring the hedgers out there. So we've seen last year at this time where that April was also very strong. So we'll see what transpires next week, but we did see the choice fall off a little bit this week on the cutout, down about $1.70 on the week on choice. One other item to take a look at next week is the cattle on feed report, and we are expecting a lower placement number for the first time in some time, but I would suspect that you could see a little bit of pairing towards the end of the week, but I'd suspect this stronger cash market here at the end of the week ought to provide some support, certainly to the April contract. Unfortunately, June has been feeling a lot of not hedge pressure, but maybe fund liquidation, fund selling pressure in there. Maybe we can find a little bit of support in that June contract from that swing low the previous week. The hogs contracts, taking a look at hog futures, the April contract did go off today, and it's interesting that there's a 23.5 cent discount in April to June, and this is one of the largest discounts we've seen, at least the largest in the last 20 years. So the question remains, why is there such a premium in June hogs over April hogs? Could it be that the trade doesn't believe that the numbers are there? Tough to know that answer. Is there more demand coming in that time frame than what we are aware of? Exports actually have been pretty lackluster the last 4 weeks. They've been down. So it's interesting that we're seeing some strength there. It feels as if the futures are leading cash. We did see cash turn around a little bit stronger this week. Cash was actually up $4 on the week, whereas the cutout was up $2. So squeezing packer margins a little bit. But it will be interesting next week when we start the week with the May being our front contract, trading at a pretty good premium to cash. As we take a look forward, the weather's still somewhat of a driving factor for demand, not only for hogs but for cattle as well, as that grilling season is off to a very slow start. But that's something to keep an eye on as well. If you have any questions about these or any other markets, please feel free to get a hold of us here at BIS Commodities at 1-800-373-2525.